Hello everyone, it is time for a residential market update. I wanted to get with you guys and let you know what's going on in our DFW markets and bring you up to speed. So I'll dive right in. In general, what we're seeing is more of the same thing. Homes sitting longer, more inventory. We actually are seeing more inventory than what we saw back in 2009, whenever you remember seeing lots of signs out. And you're probably seeing lots of signs out, real estate signs out in your neighborhoods. And this is part of the process of a market cycle. It's just been extremely elongated with our current environment of higher interest rates, along with a good economy. Things have just really drawn out over the last 2 years, where it's taken 2 years to get to a point of what is called hyper supply. So that's a phase of the market cycle that we're in. And typically what happens is, in a hyper supply market, you have lots of supply, a lot of homes on the market, which we have more than we've seen in many years. And then the next step to complete the market cycle is that prices have to fall. And so that is the next step that is slowly happening in places, and it kind of jumps back and forth depending on what neighborhood, what county you're in. And it's really interesting. So a lot of times when people think of a normal market cycle, they think of 2009, the Great Recession, 2008. And we've seen a dramatic drop in prices. We're talking 40+% drop in prices. And that's what everybody gets afraid of when maybe you hear me give these market updates, and I keep saying prices need to correct, prices need to correct. Well, we're still in a good economy. And then on top of that, fundamentally, we are in DFW insulated because we have so many companies relocate. I was looking at the news this morning or reading the paper, and this tech company just came from California, moved its headquarters. So the jobs are here. And so what happens is that we are not going to need a huge price drop, price correction, in order to get the market moving again and more normalize the market and get out of this hyper supply cycle. So what I am seeing, and you've heard me say it over and over, and I'll name two counties that I was just evaluating. One is Kaufman County and one is Collin County. And it was very interesting. And I was evaluating all the counties around DFW. And the prices came down in Collin County about 4.5%. And Kaufman County, they came down about 7%. And what was really interesting is to see the pending sales for both of those counties jump year over year. Collin County jumped 20%. Kaufman County jumped 40%. 40. So the demand is there. The buyer's there. Affordability is the problem. It continues to be the problem. And that's why we continue to see supply grow, because sellers, which understandably so, want a higher price and don't want to make the adjustment. And so that causes the supply to grow. And so what we're seeing is that if you lower your price, and it doesn't have to be significantly, but and we've seen it, especially in new construction, if you get to that 10, really even with resales, 5 to 10% drop in your price, and then the new home sales have been dropping anywhere from 10 to 15%, and they're seeing 100% growth in sales over year. So it's a small correction to move this supply, to phase us out of this hyper supply environment that we're in. It's just really difficult because what happens is because we have so much demand because of our economy here in DFW, it immediately draws down the inventory, and then we kind of go back into the same situation where we have not enough inventory and then we got to wait for supply to rise. Usually that part of the process is longer versus what we've been dealing with trying to get the supply. And so it's a weird dynamic. That's why lowering your price if you're trying to sell a home, just as some advice, you're probably 5% off, 5 to 10% off where you need to be to move your home. Maybe more depending on where you're at, what neighborhood it is, up to 15%. And so hopefully that's some advice to you. If you're a buyer, you should be making offers 5 to 10% below on existing homes. If it's been sitting any period of time. Again, we're still in a market where you can put a home on the market and it's gone that week. Certain homes that check all the updated, great homes, priced right, they're going to move. They're gone as soon as you put them on the market. That's still the scenario, but most homes are not. And that's why we're really moving into this hyper supply with more inventory that we've had in DFW in many years. So another thing that that's interesting is this year, and it really affects new construction, but it ultimately affects the economy of DFW, is that we're seeing job growth slow. So we added 104,000 jobs to our economy in DFW last year. We're on pace to add 88 this year, which is still an astronomical number. But the amount of homes that we're permitting and building, which the pipeline is right around 54,000, is you need to be adding 100,000 jobs a year to maintain and meet that supply that is coming to the market. So the good news and the interesting thing is going to be to see if that begins to really flood the market with some supply, and give us more supply than we need, and ultimately bring the prices down and be the thing that brings the prices down. But the other part of that too is that the reason why we have slower job growth this year is interest rates. It affects a business and it affects their income statement, which ultimately affects whether they hire or not. And so there's so many dynamics. Maybe I'm going too much into the weeds. For you as a buyer, seller, right now is the best time to buy. I can't say that enough. I've said it over and over the last couple months, and we've been able to see some buyers take advantage of that. Make those offers, but make them lower. Obviously, if it's a home that just hit the market, that's not the home I'm talking about that meets everybody's expectations, checks everybody's boxes, price right, that one's going to go. But if you see homes sitting on the market, don't be afraid to make an offer. It's nothing personal. It's what you as a buyer are willing and ready to pay in this current market condition. So interest rates, touch on interest rates a little bit. We got a surprise of a 0.5 point drop in interest rates in September by the Fed. And what is interesting is everybody comes to me and asks, why did interest rates go up after they dropped at 0.5 point, which was even more than what was expected? The reason why is that markets are dictated by markets. And ultimately, the 10-year yield had already priced it, which is what really correlates with the 30-year mortgage, had already priced in what the Fed was going to do, and then some. And with the fact that we still have a strong economy, the job growth did slow. It seems to be picking up, and it's not slowing as much as everybody thought it was going to slow. Well, the market begins to back up that price. They were expecting multiple interest rate lowering throughout the rest of this year, and they still may do it, but the likelihood of it is less. So then that affects interest rates. Did interest rates fall? They did. We're at about 6.5%. We got as low as 6.2 until they released the half point drop, and then we've inched up about a quarter of a point, which is still a lot better than 7.5 where we were at this time last year, and even at the beginning of this year. So that's my market update. It's moving, it's dynamic. We haven't seen this in my generation, and it's probably been since the 80s we've seen this kind of environment. But there's opportunity in every fickle environment, and I can't stress enough, there's opportunity for you as a homeowner to price your home right, price it right, and then at the same time be able to capitalize on the other side of that by making lower offers and going after that property that you like at a price that makes sense to you. So hope that helps you. And if you need anything real estate, we would love to assist you. Residential, commercial, and property management. We have nothing but 5-star agents here and would love to serve you. Have a great day. Bye-bye.